What's going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is March 23rd, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about the price action in the headline indices and what a crazy day it was. We will talk about, looking under the hood, checking out our sectors and style factors as we always do. We'll take a look at some of my trades for the day, and we're going to wrap up with some options order flow. But before we get into all of that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right into it here. And we are going to pull up our S&P 500. You can see for today's box scores, bloody red day. We were down 0.79% in the S&P 500. We were down 0.44% in the NASDAQ QQQ. We were down 3.63% in the IWM small caps. And we were down 0.97% for the Dow Jones. And you can see for the S&P 500, what's interesting, these are our ES futures. We had an inside day. It certainly didn't feel like that with how crazy the market was moving. But, here it is. We closed with a lower high than the prior day, and we also had a higher low from the prior day. So in terms of the S&P 500, we are stuck in this monthly value area. We are in no man's land, but we're still above the 20-day moving average. We're above the 50-day, and we're above the point of control. We are pretty much having, these rolling corrections where it's like, all right, growth stocks, big price correction for a couple weeks, but the market's kind of like moving sideways because we have these value names that are holding up the market. Then we have, all right, now the growth names are kind of holding up, but now all the cyclicals, small caps, all of that, those are really the ones getting obliterated. But yeah, the market's not really going anywhere. So this is definitely, a very challenging market for trend trading, because the market, really is not doing all that much in the grand scheme. If we pull up our QQQ, I'll pull up our NQ here. You can see NQ, we tagged this monthly value area low. We tagged this 50-day simple moving average, and the rip was sold. So we were talking about this in our pre-market session today, where this remains a market where, like in 2020, you could really see like, oh my gosh, market's up big today. I'm going to buy, a bunch of stocks. Or like, oh, this stock is up 5% today. I'm going to buy it and see if the trend continues. With 2021, the tape that we've been in, this is really like a buy the dip and sell the rip market. If you're doing the opposite, that's where you can run into trouble. And that's something that I've been working on over the past week or so, just incorporating that into my game and realizing, okay, 2021 is a much different environment than we saw in 2020. I ended up shorting the Qs today, and I entered my short, pretty close to the high, so that was good. For our IWM, this one, I traded IWM a bunch of times today. This one was the big loser, really fell out of bed, down 3.63%, closed below this monthly value area. So really tough action for IWM today. And a lot of the small cap individual names, this is the same thing we experienced in February as well, where IWM is down big. A lot of the components, they're down even bigger. So like MGNI is one. I was like, this is a good setup for the week. This one down 10. Another name, Yala, down 12. And this is what can happen when the indices get volatile. A lot of times the individual names will be even more so. And you'll get these crazy moves. One thing to note though is that throughout 2021, it's been better to buy, on like the deep red washouts than it has been to buy, like on these crazy rips. So with something like Yalla, it's like, all right, we'll have to see how low we go. Um, but I really think, for the most part, in some of these great names, you have to be sort of like bold and be willing to buy them on red rather than chasing them on the green. So let's take a look at our IWM. We look through that one, and then Dow Jones. Dow Jones finished down 0.97%. And you can see here, we are still, above this 20-day, and we haven't even tagged it yet. So Dow Jones is still in a strong trend, but this one got very extended, and we'll have to see if we get that pullback to the 20-day here. If we look at our heat map, you can see really interesting here. So with this heat map, we've been fed this narrative for the past month of, value stocks, reopening, value, cyclicals, no tech, none of that. This is a new era. Now we're sort of getting some mean reversion within that trade. And you can see here, we had financials correcting pretty big, energy, the leisure and travel names, restaurants correcting big. And the areas that were really sticking out, we had a couple of mega cap tech names that did okay, but the consumer staples, the real estate, and the utilities were outperformers. So we can see that, in this data here, really big red moves in a lot of these different areas. You can see solar stocks down big, cannabis down big, blockchain names down big. The only areas, to hide were consumer staples, which has moved to our top slot in our momentum list. So that's a big change right there. And what I'm starting to see, so like software did okay. Utilities were also the big outperformer, up 1.49%. So one thing that's kind of interesting, just some food for thought, is I remember when we were in the heart of COVID, and it was like, why is the market going up so much? We're in COVID right now. The economy's horrible. What's going on? And with 2020 hindsight, it really was, the market was looking forward into the future. And it was like, okay, this is the worst things are going to be. Let's invest now for tomorrow. Well, now, something that's coming to light is with these reopening names. Right now, we're in the heart of the reopening. The economic surprise index, keeps hitting new highs because we're starting to comp up against a lot of this really poor data from when we were in lockdown. And everybody's piled into these trades. Now the question becomes, with the way the market's moving right now with these sectors outperforming, these are the sectors that perform well when the economy is decelerating. So, part of me, I have this thought in my head of like, is the market, now that we're in the heart of reopening, looking ahead to the next 6 to 12 months down the road and like the rate of change deceleration that's going to happen once we move off of these really easy comps? Or is this just a counter trend move? So that's going to become more evident in the next couple weeks. But seeing staples at the top of my list now, this is something I haven't seen really since like the coronavirus crash when we were going through all of that. So this is definitely a big change, and this is something I'm going to be looking at in the days and weeks ahead in terms of potentially adding exposure to some of these areas. If we look at our style factors, you can see, nothing was spared. Really interesting. High beta and cyclicals were at the top of our list here for quite some time. Now they are towards the bottom. And what we have leading is the high div, low vol, international value, and min vol. So this is another big change under the hood here. Oh, another thing that I want to pull up is the advanced decline lines. That gives you a feel for the market breadth. And you can see here, we'll pull up our S&P 500 equal weighted ETF. You can see we had a nice pickup in market breadth in early March into, it's like March around like 15th, mid-month was the peak. Now you can see this is our advanced decline line down here. We are starting to get breadth that is weakening. So this is definitely a red flag right here that the breadth is really coming off. That's certainly not a positive thing when you have all these stocks that are going down and really just a couple of FANG names that are boosting the S&P 500. So if you take a look at some of my trades for today, throughout the day, I talked about just making sure to be buying dips and selling rips. So you can see we had a huge dip in the IWM earlier in the day. So I ended up buying some calls really just as like a scalp day trade. And I was like, market's making no progress here. We're either chopping or heading lower. So let me see if I can play some of these extremes within the range, just short term. So I bought these April calls for 568. I flipped out half of them for 592, a little scalp. I closed the remainder for 602. It's nothing too crazy, nice little scalp winner. And then at 1123, pretty much at the same time I closed out my bullish position here because we had a nice rip, I was like, all right, now I'm going to, sell the rip. So I ended up getting long some Q's puts at 1123. These puts are for May. And what's pretty funny is like I've been talking about this, how like buy the dip, sell the rip. Because that's something I've been struggling with in terms of trying not to buy things when they're up. Because this market's not really trending. But I saw pretty much like as soon as I put these Q's puts in, I was like, okay, they ripped up to resistance. They hit the 50-day simple moving average on the Q's. Nice extended range. I was like, okay, time to sell the rip. Basically, as soon as I put those puts in, I just checked Twitter really quick. And I saw like a bunch of different people on my feed were like, oh my gosh, Microsoft's moving, Amazon, Facebook. Here's my target for these stocks. I think they have so much upside. They're moving. And it was like, that was literally the high of the day when I saw like a bunch of people start tweeting about FANG names. So it just goes to show that in this market environment, a lot of these pops are being sold. A lot of these dips are being bought. And it just warrants, much more caution. I entered those Q's puts. Then the market, ended up dipping a lot further. So I was like, okay, let me try scalping long. So I still have my Q's puts on. I was like, okay, let me take these IWM calls long. I took the 220 strikes for April for 569. I flipped out half for 593. Then I flipped out the other half for 596. Then towards the close, I ended up buying them back for 573. And you can see IWM, from there got very oversold. So if you take a look here, IWM ended up closing, right on the lows. And I was like, okay, now I feel pretty comfortable with this risk reward. We just got a really nice flush in the IWM. I had taken, targets throughout the day, just day trading IWM. So I was like, I'm going to swing these into tomorrow. And if we get a rip in IWM, that's where I'll, close those out. Yeah, IWM very oversold. And that's the thing, like I'm challenging myself where it's like, okay, I need to be buying the dip. Because what'll happen is, you don't end up buying anything on the day when all the machines are kind of like going haywire. Because I think that's a lot of what this is. Like, the growth names were super, super crowded. And because that's what happens in the market. Everyone looks to these other counterparties for reassurance. So it's like, okay, everyone else is buying tech. I'm going to buy some tech. And sure enough, like after a certain point, everyone's piled into tech. Then a catalyst comes along and everyone tries to hit the exit at the same time. It looks like a similar dynamic with value names, with cyclicals. Everyone's been pounded with this narrative of the reopening economy for months now. And so now it's like, okay, everyone's piled into these names. Now today seemed like a bit of like a capitulation, like all the algos are trying to hit the door at once. And you get these dislocations. So I was like, if I don't buy today, I know if the market ends up ripping tomorrow, then I'm going to be tempted to buy. So I was like, I sold the rip. I'm going to buy the dip here. So that's what I did. Now for some stock trading, I stopped out of some XBEL on the open. This is a cyclicals name that I was trading. And the trend just kind of soured in these cyclical names. So I stopped out of that one. I tried some SI because the blockchain stocks I've had a little bit of a correction. This has been a really nice sector to be in throughout 2021. This one ended up, just dipping a bit further. So block, closed below the 20-day simple moving average. This Silvergate closed right on the 20-day. So this was one thing where like I bought it when it was green, and this one ended up turning red throughout the day. Tagged the 20-day. You can see, over the past week or so of trading, it's paid more to buy it when it pulls back than on the rips here. So I'll have to see. I held on to my SI because this one has been showing relative strength. And I think if some bids come back to small caps, this one should do just fine. What else do we have? I closed out a third of my Etsy. So again, just trying to sell the rip. Closed out for 230 spot 11. I paid 220 spot 65. And Etsy, again, like selling the rip, super important. Etsy was at 230, hit a high of like 232 on the day. Ended up closing down 0.05%. This one, glad I at least got a target off in Etsy. And then what else do we have here? And then, and the other trade I went into the close with, I got long some Expedia. And Expedia is a name that I've traded a bunch of times throughout 2020 and 2021. It's one of my better performance names. And Expedia, I picked it up back here on this tag of the 20-day. I ended up selling it much higher around like 175 last week. I think it was kind of dumb to be buying Expedia, up here. That to me was crazy. I was like, this thing is so extended. It's had a really nice run. Now that it's pulled back, I'm like, okay, I'll take my shot at it. So I bought some Expedia right into the close. And this is one where, in terms of the reopening, I think that theme is still going to be alive throughout the rest of 2021. I think it got a little bit carried away where some of these names started trading like well beyond their pre-coronavirus highs that really don't have good businesses, and sort of like every name was moving higher. I think what happens to a lot of these flush outs like we're seeing right now is the whole sector kind of flushes out, but then the names that are showing the relative strength that really do have the improved prospects, the good business models, they tend to come back. Whereas someone like the Froth and just names that were going up because everything else was, a lot of times they will, kind of stay in the doldrums. So Expedia is a name I'm comfortable with. I took some into the close. I still have my Q's puts on just in case. We'll have to see what happens with those. And let's take a quick look at our options. Order flow. And you can see here, in the beginning of the day, I talked about this also in our pre-market session where it's like, man, nobody was buying puts yesterday. The equity put to call ratio is very low. And even in the morning, it was like, man, the bread looks kind of weak, but all I see are calls going up. Then as the day weakened, we started to see more hedges going up. So we saw Qs, SPY. This looks like somebody trying to buy the dip in Baba. Baba's been like a horrible stock. IWM, you can see, pretty much like on the lows when this thing was really getting pummeled. Suddenly, you see all the put sweeps come in for IWM, more IWM, Tesla. So yeah, the flow got a little bit more bearish as the day progressed. But again, like with this IWM, maybe, it just keeps falling out of bed and really, gets pummeled. But I find this interesting where, IWM, this is day 1, 2, 3, 4, 5, 6, 7. This is like day 7 or 8 of this leg lower in IWM. And now, after the multi-standard deviation event, it's like, all right, now all these guys are buying the puts. So it's kind of interesting. And again, it's really just showing me that in the market, a lot of times it is better to be early and out early as well. So like, you don't want to be that person that's like buying after the stock has already ripped a ton, or, selling it when it's already down a ton. That's how you can really get whipsawed in an environment like this. So I'll have to see. Maybe tomorrow we just really fall out of bed and retest these lows. But But I do think today was like a nice washout. I think it got pretty oversold. So we'll have to see what happens into tomorrow. That about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all in the pre-market session tomorrow.